All right. So we'll go ahead and begin. Thank you, Brad, for joining me today. This is Kareen Senior, and I'm coming to you from Senior and Senior, and I'm joined by Brad Gainey, who's going to give us some great insight into the life of insurance. So, Brad, will you introduce yourself for me?
Sure. Green, I'm Brad Gainey. I work with the Gainey Agency, which is part of Symmetry Financial Group. Honored to be able to be a guest on your show today.
Thank you. Brad, I have many families that are either adult children or they're seniors themselves, and they're looking for insurance and they just don't know where to go. So I put together some questions here that we'll just run through, and I'm asking you to answer them. And if you feel like you want to add anything else, please do so. So we'll kick it off with number one. Can you explain exactly what long-term care insurance is? What types of services will it cover and for how long? And when should we purchase it?
Oh my goodness, that's a loaded question. Long-term care, it's always something that we know that we need, but we never get around to looking at. As we start to get older in life, we need to start thinking about how that care is going to be paid for. And statistically, we're probably looking at about one third of the U.S. citizens that are over age 50 haven't even started saving for long-term care yet. So what we can do, we can kind of look around, and it's not a one-size-fits-all situation that we work through. We really need to look at what the ultimate goal is for the family and come up with a plan by reverse engineering it to create a solution that's going to work and be affordable for the family. So some things that long-term care can help cover or maybe even offset could be home health care. It could be respite care, adult daycare, assisted living. The list goes on and on. We can work on nursing home facility care, bed reservation, chore services, homemaker services, and such. So, Karina, it can cover a lot of different aspects in our seniors' life.
Mm-hmm. Okay, good. I know you mentioned at the beginning we kind of wait around to get it. Do you think we should be getting it now, before we need it in our 60s and 40s or 50s, or does it just depend?
That's a great question. When do you get stuff? You obviously need to get it before you need it. Typically, in the insurance world, the healthier you are and the younger you are, the lower the premiums are going to be. So it's always a good idea to start looking as early as you can so you can start preparing for it. And you need to look at the different plans that are going to be available. Take your time and make a great decision for what's going to care for you in the later years.
Very good. Thank you, Brad. So next question I have. Can you explain the difference between a term and a whole life policy?
hmm Absolutely. They are both wonderful policies. In fact, a lot of your clients probably already have one or maybe even both types of these insurances. But um, these types of plans are like tools. If you have a carpenter that comes and works on your house, he's going to bring over certain tools to perform a certain job. So, a term policy, for very basic purposes, is a type of insurance coverage that covers you for a period of time. That period could be a 15-year period, it could be a 20-year. You might even be able to look at like a 30-year period of coverage.
Mhm.
Once the period is over, you could probably continue to keep the policy depending on the company that you're insured with, but the premiums are going to start to go up after that period is over. So during the term period, your premiums are typically locked into place so they don't go up. A whole life plan is what we consider more of a permanent policy. Okay, this policy can actually cover you into your late 90s, into your 100s. And a lot of whole life plans, when we set them up, the premiums are going to be locked into place. So you know what you're going to pay. It's really easy to budget for the future with a whole life plan that has a premium that's not going to change. And you have that permanent coverage. So as life changes, as health changes, the insurance company can't take that policy away from you, even if you have a critical illness or a chronic illness.
Okay. Brad, can you talk a little bit about when it comes to the term life policy, the guaranteed acceptance we hear a lot about with insurance companies? Is that something for seniors to go towards these guaranteed acceptance policies, or is this just kind of depends on who you are and what your health status is.
Karina, it definitely depends on your situation,
Mm-hmm.
specifically due to your health and
Mm-hmm.
due to your needs and your budget.
Mm-hmm.
There are policies out there that we could literally get anyone covered for as long as they fit in the age requirements.
Mm-hmm.
Um, when we're looking at those types of plans, typically they have a contestable period for 2 and sometimes 3 years, meaning that, God forbid, you did pass away in the first 2 to 3 years. All of the premiums would be paid back to the family that were paid into the policy. Plus, sometimes you may even find that they might add 10% interest to the premiums to be returned. Um, on the flip side of the coin, you have other plans that you do need to medically qualify for
Mm-hmm.
by simply answering just a few medical questions to go through the underwriting process. They typically look at a prescription history check on the candidate. And once it goes through the underwriting, you can be approved. And a lot of times, these plans don't have that 2 or 3 year contestable period. So
Mm-hmm.
it's what we call an immediate death benefit. So to recap, whenever you're looking at these types of whole life policies, you can have a guaranteed issue. And this is a type of plan that you don't have to answer any type of medical questions. You'll see commercials about this
Mm-hmm.
throughout the day. Hey, call 1-800. You can apply today and be covered today with no medical questions whatsoever. If you read the fine print, if the insurance agent or broker explains the policy thoroughly to you, they should tell you that the first 2 or 3 years, depending on the policy, only the premiums will be returned.
Mm-hmm.
The second type of plan, just to recap, is an immediate death benefit. You do have to answer some medical questions to go through. It will look at a prescription history. But you'd be surprised, Karine, a lot of these applications that we apply for are pretty lenient on how long ago did your critical illness occur?
Mm-hmm.
What medication do you take? And have you had complications? Like, they look at a lot of things to allow people to actually qualify. So that's where we can do a good deep dive to see what's going to be the best plan that you do qualify for.
Okay, that's good to hear for those folks that may have had a health concern long
Mm-hmm.
ago. That doesn't mean that they are out. They can't get
Right.
anything. They just need to make sure they're connecting with an agent or broker. Got it. Okay.
Absolutely. Karine, I am a big fan of having lots of insurance. The job of insurance is to cover the unexpected. You never know when that tragedy will occur, and I use that word "will" because we all know that something's going to probably happen to us at some point, whether
Mm-hmm.
it's death or critical illness or a chronic illness.
Mm-hmm.
So, life insurance covers you for your life. If you pass away, your family will receive a benefit from that life insurance policy typically. Okay. Critical care coverage. A lot of times we can set those plans up to cover you in the event of a cancer, like basically, or maybe a heart attack or a stroke. With our medical science today, a lot of times if we can get to the hospital quickly enough, let the expert team of doctors work their magic with us, they can say, hey, you know what, Karine? God, I'm really glad you got to us in time. Next couple months is going to be really tough for you. You got some physical therapy, you got a lot of rehab to go through, but you're going to be okay.
Mm-hmm.
All right. You get to go home and spend time with your family. But think of the medical costs that are associated with that whole ordeal. So, a critical illness policy or a policy that has a chronic illness rider in it, things of that nature can actually provide money to you for certain purposes. Okay, there's lots of different plans out there. Some plans have literally no restrictions on it. They just hand you a check and say, okay, Karine, here's $50,000. Use it wisely,
Mm-hmm.
right? There's other plans that say, okay, this money can only be used for certain aspects, such as long-term care. It can only be used for your home health care or your nursing aid, things of that nature. So that's where we can kind of look at what's going to be the best solution for each and every situation. But I'm a huge advocate of having different types of insurances because, again, going back to what we said earlier, if you have a carpenter that comes over to your house to do some work on your home, he's going to have different tools for different jobs.
Right.
So I'll tell an example here. Hypothetically speaking, let's say that your mother isn't feeling good. She goes to the hospital and turns out she's actually having a heart attack.
Mm-hmm.
Gosh, if she has a critical illness coverage plan in place, as soon as the doctor puts in the medical records that there was a heart attack, the insurance company can pull the medical records and actually distribute the money for that critical illness coverage plan as long as it was an eligible claim.
Mm-hmm.
Okay.
Mm-hmm.
So she could receive $25,000, $50,000, $100,000 right now because she had a heart attack last week.
Mm-hmm.
All right. Let's say the health problems continue. She's just not feeling really good. Back and forth to the doctor. She still has that benefit in her checking account that was already paid out. And God forbid she gets put into a nursing home. At that point, maybe the long-term care plan, if we set it up properly, can cover those costs associated with the nursing home. Continuing down that roller coaster ride, the health is up and down, the timeline, the family's, emotionally drained at this point.
Right.
At least the finances are being covered, and God forbid mother passes away. Now the life insurance can pay out. So all along the way, you have these different tools that can help each and every situation. That's very important.
That's
to start thinking about.
That's very good. That's very good. I think many families just think about the death, the end, and they forget sometimes about that time in the middle when our parents can get sick and they need the care. So I'm really glad you were able to articulate that.
Well, I think if you look at the costs that are associated with our seniors, I mean, the cost is just enormous.
And it goes up every year. Yeah.
Yeah. Have to go to the hospital and get an MRI. Mm-hmm. My mother had a stroke 2 years ago. She had to have a helicopter flight to a stroke specialist hospital in West Virginia. $75,000 for the helicopter ride.
That's before she even got into the facility or into the hospital. It's just the prices. So it's good to be able to set these things up in advance so that you're covered when the time comes. So tell me, Brad, a little bit, when we're using this money before they pass away, obviously, this is pulling from the death benefit, correct? That we're paying for the heart attack or paying if mom or dad has cancer. That's pulling away from the money, the monies that will be left over in the death benefit, correct?
That's a very, very good question. And the answer could be yes or no, depending on the type of the policy.
Okay.
So that goes back to kind of our analysis of the situation. Like, okay, well, what do we want it to do? Mm-hmm. So we can set it up to where we have kind of an all-in-one type of insurance policy that covers everything. Okay, that's going to be necessary. If that's the case, a lot of times, whenever you start using money out of that policy, the benefit amount comes down. Or we could set up like standalone policies and say, okay, you know what? If you have a heart attack, here's $50,000. Okay, that policy is going to be settled and the claim's going to be paid out. And then you have no policy anymore, but you have $50,000. So you could go either way with that type of coverage.
Okay, very good. Thank you for that.
Mm-hmm.
All right, let's see. So we talked a little bit already about my next question, which were these hybrid life insurance policies. And I've heard the word hybrid tossed around a little bit. And some of the things that you've already talked about that can be covered in these certain type of policies. But can you explain a little bit further about what options are available if there is a terminal illness or they have these long-term care expenses? Are they getting two separate policies, or are we coming back to what you already referenced? Just kind of getting a policy for what you need it for, depending on what you're needing it for.
Yeah, I'd say you always need to look at what's going to fit you the best, because if you talk to your family members or your neighbors, your girlfriends or old high school friends, everybody's got a different scenario.
Right.
But there are some hybrid policies out there, such as like a universal life that has a long-term care rider on it. You can even set up annuities, Karina. If someone has a 401k or an IRA or a savings account and the money's just sitting there, you can actually set it up into an annuity that has that long-term care benefit in the the package. Okay, so there's lots of ways that we can set it up, and there's a few things that we need to keep in mind. Everyone is going to die. Okay, so we have to have life insurance. Um, we can get almost anyone covered up to the age 80 to 85. So you're never too old to look at life insurance. If you're over age 85, then we might have a little trouble finding a life insurance plan for you at that point. We may have to have a creative solution and say, okay, you know what, you're going to have to do the old pillowcase trick and put money away for it in your pillowcase and just save. But you're typically never too old to look into life insurance. When we're looking at living benefits such as critical illness, chronic illness, terminal illness, these are plans that give you access to money while you're still living. We call those living benefits. Right. So critical illness is such as a heart attack or a cancer or a stroke. Chronic illness is when you lose 2 of your daily activities, whether it's you have trouble feeding yourself or bathing, taking care of yourself, taking medicines, things of that nature. If you were to lose 2 of your daily activities, a lot of these plans will actually allow you to process a claim and receive money from it. And then, of course, terminal illness is, God forbid, the doctor gives you 12 months to live or something like that. A lot of these plans will allow you to access the benefit right now because you're going to be going back and forth to the doctor. There's going to be a lot of expenses that are going to be racking up. So it gives you access to money to where you don't have to go into financial burden in those last days where you just need to focus mostly on yourself.
Right. I'm glad you talked about the different plans, especially with annuities and looking at 401ks, because like myself and my peers, I mean, we're working and we're saving this money and we kind of think the only thing we need, I've talked to many families, the only thing we need is life insurance. But there's ways to make maybe that money you have now or you've been building over the years to work for you for later. So that's important.
Yeah. Okay. Absolutely.
Well, the last question I have, and we talked a little bit about this already, some families believe that once they reach old age or around 65, it's not really old anymore, but that 65 number, which is the Medicare, eligibility number, they can no longer purchase life insurance. So can you discuss some of the options that are available, especially for older adults that aren't suffering from a terminal illness? And I heard you say up to 85. So is it just a slew of more options available? If I am 67 years old and I'm fit and I'm fine and no illnesses, it's more options available. Yeah. Okay.
Absolutely. There's so much available on the insurance market. Our rule of thumb is 80 to 85 is kind of that max age, depending on health conditions. But it's very common that we can get coverages issued and approved with individuals that have had critical illnesses like major heart attacks or bypass surgeries or invasive cancers. We've been able to find coverages that have been approved and put into place for these clients. So if you do have some medical concerns, if you've been told no before by other insurance agents, we're happy to help do some homework and research to figure out what options you have available. But even at age 65, you've got a lot of doors that are opened up, whether it's a whole life policy, a universal, or maybe a term life policy. And then at that point, we can start really looking at how to get the plan set up to accomplish your goal. Critical illness coverage here in the state of Maryland, we can actually cover individuals up to age 89 with a cancer, heart attack, or a stroke policy upon approval.
Wow. So okay.
Age 89, we can still get approvals for that up to $100,000, which is amazing.
Yeah, that's phenomenal. I've just working in the long-term care industry. I am starting to see more seniors that are waiting until their 70s, 80s, late 80s to make a decision about their long-term care plans. So it's good to know if they're making a decision about their long-term care plans and if they're going to look at assisted living or nursing facilities, that they have options with insurance as well. This is really good. Thank you, Brad. This has been really helpful. Do you have anything else that you'd like to add?
Not at all. I've worked with you for years, Kareen. I know you're, just a super person. You take great care of your clients. So if I can ever help any of them, I'm happy to do that for you. Just point them in my direction. I'll be glad to take care of them.
Okay, very good, Brett, and I most certainly will. You have been a great advisor to my family as far as insurance is concerned, and I will definitely be posting your information alongside this video when we wrap up here. So thank you again, Brett. It was great having you, and we'll have to do this again soon.
Okay. All right. You
Okay,
guys have a blessed day.
thank you. You too.